Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies, Palantir Technologies, Tesla stock, as well as Nio Stock. In this video, we will be dissecting a plethora of articles to where the first one is titled 5 Big Analyst Cuts, SoFi Technologies Slashed with 3 Downgrades, Shares Plunge. So we'll be going over their latest news updates in regards to these price downgrades, whether or not this is a good opportunity to accumulate more SoFi shares, and how this could affect the future of this overall company. On top of that, we'll also discuss why else SoFi Technologies may be dropping in their overall share price apart from these stock price downgrades, and we'll go over the latest news updates and catalysts that you as an investor should be aware of. After we talk about SoFi Technologies, we will jump over and talk about Palantir Technologies regarding how Palantir can actually benefit from the Federal Reserve's decision and the current artificial intelligence boom which is happening right now in the market. We'll be going over their latest news updates, price targets, what this company could make of itself in the future, and whether or not it's a buy rating, a hold rating, or a sell rating right now, according to my opinion and this author's opinion. We'll also be talking about Tesla's Supercharger network regarding how it could add $1 billion to their overall market cap, which is going to reflect very handsomely on their overall TSLA stock price. Lastly, we'll talk about another electric vehicle company named Nio, which is a Chinese EV company that is up more than 20% this week. So we'll be going over their latest price targets, the news that is causing them to surge by around 20%, and then after we discuss this very bullish positive article, we will be dissecting another article that says that the Nio share price is actually a trap and the rally is a fake bounce, and investors should be aware of this. So we'll be comparing and contrasting these two articles to one another to determine which one is really backed by the data. So for more videos on SoFi Technologies, Palantir Technologies, Tesla, or Nio, go ahead and annihilate that like button right now. Go ahead, click or tap it right now because it helps me out a ton, especially if you want more videos on any or all of these companies. Subscribe for more videos just like this one. Don't forget to become a member of this channel to support me personally because that's what keeps me here on YouTube, and you can do this for as little as 99 cents. However, if you cannot afford 99 cents per month, don't worry. By subscribing, you will receive this content completely for free. Lastly, I would love to hear your comments down below about the price targets you have for SoFi stock, PLTR stock, TSLA stock, and NIO stock. With that being said, I say let's jump right into today's stories. As you probably already know, SoFi Technologies is a fintech company or a financial technology company that operates as a digital bank, and currently they're trading for around $8.53 according to their current share price. The company has dropped by around 8% today due to these downgrades and a couple other negative news catalysts that have been in the news surrounding this company. However, other investors and analysts believe this company could fall as low as $3, which to me is absolutely ridiculous, while other more positive bullish investors believe the company could surge up to $14 over the next 12 months. So let's discuss why SoFi shares or the SoFi stock price has plunged recently. Well, according to Wall Street, it's due to their downgrades. Piper Sandler recently adjusted their rating on Palantir from an overweight rating to a neutral rating, which is bad news. However, they do have a price target of $8, which is actually an increase from their former price target of $6.50. So in my opinion, that's actually good news. The company is still overall bullish and positive when it comes to SoFi Technologies because the firm says that the stock's outperformance year to date is warranted for a higher share price. However, they're particularly interested in the overall interest rates declining and other factors which could drive their margins. On the other hand, Piper Sandler is also concerned about increasing interest rates, which could remain high for a long period of time due to persistent inflation. And that's exactly how the Federal Reserve is trying to stop inflation in the United States by highering the overall prime rate and various interest rates. However, we also have a Bank of America securities analyst which downgraded SoFi stock from a buy rating to a neutral rating or a buy rating to a hold rating with a price target of $10. However, again, this is still an increase from their former price target of $9.50. And as we discussed yesterday, an Oppenheimer analyst also discounted and downgraded SoFi stock. But again, these are just rating downgrades. If we look at their overall price targets, the price targets have increased to $10 from $9.50 or from $6.50 up to $8. So although the rating has decreased, the overall price targets and price predictions still remain pretty positive for this overall company. But what about some other news catalysts that are going on right now that have impacted SoFi shares? Well, as you know, I've predicted that the shares were going to surge, and that's exactly what we've been seeing over the past month, to where the company has gained more than 96.37%. Investors currently are hoping that SoFi Technologies will demonstrate further strength in their overall financials, and they can do this with their next earnings report. Right now, it's forecasted that the company is projected to bring in earnings per share, or EPS, of a loss of 6 cents, which would represent a 50% increase from the same quarter in the prior year. Meanwhile, the latest consensus estimate regarding their revenues is around $471.45 million, representing a compounding annual growth rate, also known as a CAGR, of over 30%, which is very positive. Now, for the entire year, estimates have come in that they will have a loss of 17 cents per share and revenues close to $1.97 billion, representing a 57.5% increase and a 25.15% increase respectively. However, SoFi Technologies is known for presenting revenue beats and earnings beats, and I personally think they will more than surprise investors in these upcoming reports to where they could achieve profitability by the end of the year, which again should increase their overall share price at least temporarily. In the end, this particular author has a hold rating on SoFi Technologies, which I actually would agree with, considering that their current price is very close to their high-end price targets. However, that doesn't mean that the shares can't go any higher, because I believe they will, but this is going to be determinant on their future financial forecasts. Once the upcoming earnings report actually comes through and we get new forecasts from analysts, professionals, experts, and their management, then I will personally increase my overall hold rating to a buy rating, but I can't really move that rating unless I get data to back that up. But overall, SoFi Technologies looks to be primed for future growth, especially if you're holding this company for a very long-term investment over the next decade. So overall, very positive news update for SoFi Technologies, despite the downgrades from a few analysts. And although they decreased their overall rating, their overall price target is still very strong. Now let's talk about Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company which serves commercial clients as well as government agencies which specialize in artificial intelligence. Palantir Technologies, ticker symbol PLTR, has had a very impressive run, appreciating by almost 150% year to date, which is phenomenal. Nearly all policymakers agree that further rate hikes, referring to interest rates, will need to occur in 2023, meaning that despite the Fed pause, we are going to see interest rates increase, and this is going to negatively impact companies, specifically growth companies. However, Palantir is in a unique position to weather this overall obstacle very well, and I'll get into that in just a moment. Regardless of the recent rally, the author indicates that the PLTR stock price still is a great long-term investment, and for investors who are looking 5 to 10 years down the road, this company looks like it has a very bright future. Now let's discuss why the Federal Reserve's decision to increase interest rates potentially will not really matter for Palantir Technologies. Well, after 10 consecutive rate hikes for interest rates, nearly all policymakers right now share the same viewpoint that to get inflation further under control, rate hikes are appropriate, meaning that as of right now, there's a 64.5% chance of a 25 basis point rate hike, which could be determined at the July 26th meeting. But let's talk about how Palantir could weather this storm. Aside from their phenomenal balance sheet, with over $2.9 billion worth of cash and or cash equivalents, there's another thing that Palantir has that other companies, including Apple, Microsoft, Amazon, and other bigwigs, including Google, cannot match. And this is it. Palantir has zero debt, and its largest liabilities, both current, short-term, and long-term, are below $1 billion, meaning that even if rate hikes were to occur, this isn't going to impact Palantir Technologies as much as other companies. However, Palantir, since they have zero debt, these rate hikes really aren't going to impact them that much. However, I do want to say that from an investor psychology standpoint, the PLTR stock still could move down, because investors are going to think, well, Palantir is a growth stock. Growth stocks are falling right now. I think it's a good time for me to sell Palantir Technologies. So fundamentally, the company literally really won't get touched by these rate hikes, on top of the fact that they are GAAP profitable and they are also free cash flow positive. But investors aren't thinking that way. They are just going to sell and jump on the bandwagon, so please be prepared for a PLTR stock pullback. In the end, the author still thinks that Palantir Technologies is a great buying opportunity right now, or at least it's a good buy and hold opportunity for future investors, even after surging close to 150%. He does believe that shares of the PLTR stock price could retrace and pull back, which is what I've been saying, and I don't even think that it could. I think it will. It's literally only a matter of time before the AI hype wears off and before investors start to get antsy. However, it is going to be a better opportunity to wait for this company to pull back and then either reinvest profits or to get into this company for the first time. But let's talk about a pretty positive note where BAC increased their price target to $18 for Palantir stock from their initial $13 price prediction, which is very positive. Other experts, including the author of this article, believes that the PLTR stock will exceed $20 before the end of 2023. I really like the overall bullishness behind this company, and I can't wait to see the future of where this company actually goes and if this author is really right. Now let's jump in and talk about Tesla shares regarding how their charging network could add $1 billion to their overall market cap, thus increasing their overall share price. The best part about this, in my opinion, is that Tesla is the dominant electric vehicle maker, seller, and their technology is phenomenal. So this supercharging network just puts them further ahead of their competition. Right now, Tesla is trying to establish themselves as the North American charging standard, also known as NACS. Tesla, in my opinion, will become the standard for North America and potentially even across the world. Tesla analysts believe this company, if they attain this, could increase their market cap by $100 billion. The fact that GM and Ford, like we've talked about previously, have already joined this NACS standard just puts Tesla ahead of other charging network companies, especially in regards to the North American market. So what would happen in the share price if this actually happens? Well, currently, if this were to happen right now, the shares would jump up from around $260 all the way up to $293, meaning that this company still has a considerable amount of upside. So overall, a very positive news update for Tesla. Next, let's talk about another electric vehicle maker named Nio, which is a Chinese company which has recently surged by around 20% despite a pretty negative earnings report and news updates. Currently, they're trading at around $9.50 after this surge, while other investors believe this company should only be worth around $6, while more bullish investors believe this company could surge as high as $25. For me, I would wait for this company to pull back because they have a long way before they achieve a profitability, which is currently projected to be in around 2025 to 2026. Right now, Nio shares are up 20% this week for two main reasons. One is that they have recently slashed the prices of their electric vehicles, which hopefully should increase demand. And the second reason is that China is slowly opening up right now and investors are taking notice. However, I do want to point out that Nio shares are still down around 40% due to various economic volatility that is happening over in the Chinese market. And the shares also fell because their Q1 2023 results were not that impressive, but ultimately many investors believe the company could trend upwards due to positive momentum in both the Chinese and the American market over the next few weeks, but we're just gonna have to wait and see. Lastly, let's close out our story talking about Nio with where it could go in the future. And essentially this will depend on their overall demand. Nio's management recently commented that since they cut the prices of their electric vehicles, that they are anticipated to deliver far more vehicles in the future, thus increasing revenues. However, I want to point out that if you decrease the price of your product, you are decreasing your overall margins, meaning that even if you sell more, that doesn't necessarily mean you are going to make more money. But management does believe they will end up living up to this. Nio's management even commented that they're going to more than double their overall output in 2023 compared to 2022. However, some investors are questioning this overall claim for their ability to live up to the goal of delivering 250,000 deliveries this year, coming in at 250,000. This would mean that the company would need to triple the number of vehicles delivered over the last few months, or at least during the second half of 2023, and management says that they could potentially do this. I personally think that the increase of output will happen, but not to the degree management is saying. I don't think the company is going to triple their overall output. However, I do think it is plausible for the company to around double their overall output, which should reflect pretty positively in their overall share price, depending on how investors react to them missing their overall delivery numbers. But we could have a great surprise from this company. We don't know for sure, but all I know is that during the second half of 2023, which we are entering in right now, the company is supposed to ramp up their overall production and increase demand by cutting the prices of their overall electric vehicles. So with that being said, I would love to hear your thoughts on Nio, Tesla, Palantir, and SoFi Technologies. Don't forget to go and annihilate that like button, subscribe if you are new, become a member of this channel to support me personally, and I will see you in the next YT video.